In the last few years, something very interesting has been happening quietly in India. Some of the world's biggest financial companies, companies that manage trillions of dollars globally, are either entering India or expanding their presence. But the big question is why India? And more importantly, does this actually help common investors like us? In this video, I will explain why global financial giants are betting on India, which companies are involved, and what this really means for everyday people without hype, without jargon. Let's start from the basics. To understand this trend, we need to understand India's position today. India has a huge population, a young working demographic, and most importantly, massive household savings. But here's the key point most people miss. Indians are great at saving money, but not everyone is actively investing in markets. This creates a huge opportunity. From a global company's point of view, even a small percentage of India's population is a massive market. Digital adaptation is rising fast. Financial awareness is improving. That's why India is no longer seen a future market. It's seen as a present opportunity. Let's start with BlackRock. BlackRock is the largest asset managers in the world, managing trillions of dollars across countries. Globally, BlackRock focuses on long term investing, technology driven risk management, large scale retail participation. Their interest in India is not about short term profit, it's about scale, long term growth, and building systems that can serve millions of investors. That alone tells us one thing: global players are thinking 10 to 20 years ahead when it's come to India. Next, let's talk about Vanguard. Vanguard is famous worldwide for low cost investing in passive funds. Their philosophy is very simple: keep costs low, stay invested long term, and let compounding do the work. India fits perfectly into this philosophy because retail investors are increasing. Cost sensitivity is high. Long term wealth creation is becoming a priority. The presence of companies like Vanguard shows that India is becoming a serious long term investment market, not just a speculative one. Now let's talk about Goldman Sachs. Goldman Sachs is not for beginners or small investors directly. It operates more in institutional investing, advisory, market infrastructure. Their expansion in India signals something different. It shows that India's financial ecosystem is maturing, corporate activity is increasing, capital markets are becoming deeper and more sophisticated. This helps the entire system, even if retail investors don't directly interact with them. Now let's come the most important part. What does this means for you and me? Here are the real benefits. More competition when global players enter. Existing companies must improve products and reduce costs. Better investment practices. Focus shifts from short term tips to long term planning. Technology driven investing. Better tools, better transparency, and at the end, better data. More choices. Retail investors are no longer limited to a few options. But remember, this doesn't mean every new product is automatically good. Now, let's be honest. Just because a global brand enters India doesn't guarantee success. India is highly regulated, extremely price sensitive, very diverse. Some global companies succeed, some struggle. For investors, the rules remains the same. Understand the product, not just the brand name. Big names, big opportunity, but your decision still matters most. At the end, to sum it up, global financial giants are entering India because India is shifting from a savings economy to an investment economy. The long term growth story is strong, and retail investors are becoming more aware and active. This trend is important, but it's not magic. If you want, I can make a deep dive video on one specific company, or maybe a beginner friendly guide to choose investment platforms, or maybe a comparison video between India versus global financial players. Comment below what you want next. Like this video if this helped. Subscribe for more clear, no hype financial content. See you in the next one. Bye bye.